Hello everyone, and welcome to the Stock Union's YouTube channel. My name is Alex, and today we're going to do a really important video, particularly through those that are thinking about investing but haven't actually pulled the trigger yet. Maybe if you're not quite sure what you actually need to start, so what we're going to do today is we're going to break it down. So we're going to talk about how to start investing in the stock market, particularly the assets of the United Kingdom and American Securities Exchange stock market. How do you start investing in those companies even if you have the little money? So I've got for you 5 steps, break it down. So stay tuned, and always, if you like this video guys, please show your support to the growing channel. Leave a like, hit and that thumbs up button, and of course comment. I want to know if this video is really useful for you guys and whether they really help you getting started, because with investing, the sooner you start, really the better your outcome's going to be in the long run. So if you want to jump in on equipment, so without further ado guys, let's get stuck into this one. I don't really wait to share it with you guys, so 5 really simple steps to get started. Let's dive right in. So the first strategy that I wanted to share with you is to apply different investment strategies. So what I mean in particular in regards to this point is you need to think what really you'd like to start investing in. So whether you're really thinking of your retirement portfolio, or you're just a student and you want to build a really aggressive portfolio, or you're just working and want to earn spare money like a side income. Yeah, so as you can see, completely depends on your preferences and the way how you think of building your portfolio. So after you have understood what for you're creating an account, please make sure that you're going to the step number 2, because it will play just a significant role in this matter. Very soon on our website that is called stockunions.com, will come within the next week. We'll publish the examples of the watch list that will fit the particular groups of the people that I have discussed before. What I actually mean by the second step, it's called watch list. So the watch list is technically the list of companies that you're simply interested in. Like, for instance, if you have a brand new, iPhone or MacBook, and you're definitely sure that Apple stock will increase by years, and you think it's going to be a really good investment, so you will go to your broker and he will put Apple in the watch list. So that's the way how it looks like. It's kind of simple and it's really nothing complicated here. But when you're going into details, you need to think where exactly I can invest my money in. And now I will show you probably one of the best brokers in the United Kingdom, and additionally we'll also put the list of countries that are supported by this broker. The name of this broker is Trading 212. That's the one that I'm personally using, and I do think that's the one that you definitely need to rely on. Just going into depth, I will not provide any referral link or anything like this. It is not a definite link, it's not an advertisement. Just click on the button below and you will go straight to the website and think of whether you would really like to use it or not. After you have chosen the broker, we're going to the step number 4, namely after we have put the companies in the watch list and we've chosen our broker, we need to purchase this or that particular stock. But here's the deal: you don't want to just simply put your money in the stock market or in the stock that you don't really want to purchase or anything like this. You need to just look on the first tab. So you need to look on the strategies that you're thinking to use. If you're thinking of like starting investment for your retirement, you can go on Google and you can search for some very good portfolios of the public investors like Warren Buffett, or it can be also Bill Gates. They have a very good defensive portfolio, and that is the main aim of these portfolios is just to grow your income for a very long term, like not even 5 years, it can be like 10 or even 20 years. If you have a different perspective, if you're for instance a student, you're like 20 years old and you want to build a really aggressive portfolio, you will not look in the stock market in the same way as it looks by the first group of the people. Why is it so? Because you don't have really so much like passive capital. You don't really need to spend lots of money on your family. You don't have any children. You don't have really a very expensive car. You're not spending lots of money in gasoline. You just want to earn like a side income, and even if you have a permanent job, it's going to be the very best solution for you. So what you're going to do, you're just going to go on For instance, you can go also on our website, and as I have said, within a week and next week we're going to publish very good examples of the watch list. So you can just click on the button for the students here, and you will see which types of the companies we would want really just to recommend you to choose in order to build a really good portfolio. So when you have actually decided on the group of the people that you can really just suit to, you need to also think about the next matter, that's the dividends portfolios. Lots of people are just talking about dividends. There are lots of videos on YouTube about dividends, the way how you can just buy stocks that have a very big and a huge even dividends yield, like the company of Valero Energy, or Ultra Group, also AT&T or Chevron company. They're just pretty big companies that have a pretty huge dividend yield, but that's not really the thing that you need to rely on. Despite if just you have like around $1 million that you can just spend on the stock market, that's the only way how you can invest in the dividend stocks. Why is it so? Really, because below I will also attach for you this simple dividends calculator. And even we are going to go to this straight away. You can just see that you can just need to put on your company ticker. So that's the only thing that you need to put in this graph, in this Excel, actually in this Excel function. Just you need to put the ticker. Also you need to go to Google and look up for the amount of money that is paid for one purchased share. If you see, like for instance, we're going to take the example of Coca-Cola, and we can see that basically even just know Coca-Cola is quite a big one. We'll choose the example of Cineworld Group PLC. That's basically one of the biggest cinemas chains in the world. It's also in the United States, also in the United Kingdom, and lots of the cinema chains in Europe. You'll see that the current price of it is 104 pennies, so it's basically cents for £1.04 per one stock. And the dividend payments per share, despite the fact that they're not paid right now, is like 65 cents. Let's take it, and as an example, it's not just an accurate numbers money, but just take it as an example. And for instance, we're going to take the numbers payments per year is 4 payments. So basically you will have annual dividends of $2.60 from the Cineworld Group PLC 1 year. So just look at the example on the second table. So right away on the next one, you will see that per payment, for instance, you would like to you would like to receive the payment $100. So your investment is supposed to be $41,000 in order to buy 154 shares. That is quite a lot. And just because of it, you will receive $400 per year. That's not a big money, but you will spend really a lot. So as you see, in order to receive lots of money on this dividend stocks, you need to spend also a lot and invest really a lot. And I'm not quite sure whether all of the people have such the big money. As we have discussed before, we would like to start with at least with small, even the little amount of money. It's like, let's take $100 will be okay to start investing online. And especially on the trading 212, once again, it's not an advertisement. You can spend even $1. And depending on your local currency, you can spend one unit of your local currency. It's quite good really, but please, once again, don't take Cineworld as an example, because it doesn't have any accurate information here, because Cineworld has decided to decline any dividend payments afterwards in this year, after all the cinemas have been closed due to the COVID. So then we're going straight to the fourth point, and the fourth step, I think that's a really significant one. They check companies' balance sheet and income statements. What I mean by this, depending on the group that you have decided to choose, you need to look in the balance sheet and the way how the company is doing. There are lots of indicators, there are lots of stuff that can be discussed here, but just one main example, look in the income. Whether this company is just at least generating any money. Do they have actually any profit? If they do not, I don't think that's really a good matter to start in. investing in this company, because there is no way of the company, there is no no advocacy of the company, how it's basically making money. If it does not make any money, so I think that the stock market and the stock price will just go down for this particular company. And as we have discussed before, I think that that's the matter of your watch list. So you need to put the companies in the watch list that are really reliable, and you really think that these companies will do a really good job in the future. So then you need to think of probably the fifth step that is quite similar to the previous one, is you need to basically combine the first one and the fourth one. So it's gonna sound probably kind of confusing for you. But what I mean for this, you need to do your own research. You need to do your own research for the companies that you would like to invest into. Despite having, like, we have really on this trading, if I'm not mistaken, there are just quite big number of companies, more than 3,000 companies. If you're gonna go also in this app, you will see there is such a thing that is called buy library. There are lots of people that will be just talking about any penny stocks that you need to invest into, but please do not rely on this information. They're not the professional investors, and they do not give you really just useful information, because usually the penny stocks is just a very speculative instrument. And if you don't want to just to be in such kind of a trap when you have invested your first 1,000 bags, and next day you will see like minus 200 bags, just because of the fact that you have put more than 50% in the penny stock. That's not the way how it is supposed to look like. Even if you have an aggressive portfolio, you need to put just quite a big percent in the company that you really think that you can rely on, and that's going to be the biggest percent. Also, as you can see, I will just provide you with my own portfolio, with all of the, with all of the stuff. But I will just put some companies. I will blur them, because this information is kind of a private, and this is not information for free. But anyways, as you can see, just quite a big percent is just is put in the ETF funds. So in the ETF funds that is called Invesco Bloomberg Commodities. Nowadays there is a big trend, of investing money in oil and gasoline companies. So Invesco Bloomberg Commodities, that's the one that I have put my, lots of money into this one, and I think that's gonna go really a lot, because that's kind of a defensive stock. There's kind of a defensive share that you need to purchase in order to really, just rely on. But once again, I'm not a professional investor, and this is not an investment advice. You can just do everything by your own. Additionally, as you can see on my chart, my pie, you can see that I have a very big diversification. So basically, in the step number 5, we can say that you need to apply diversification in everything what you're doing. Even if you're doing the diversification in the stock market, you need to do the diversification in the brokers. So not just put your money in one app or in one broker. Just put your money in 2 brokers or even 3 brokers, because despite the fact that some of the brokers, they have a very big, they're usually regulated and they have safe funds. You don't want to go through this very complicated process, this complicated procedure. You just want to put your money, and within a year or 2 or 5 or 10, you just want to really go into this app and see that it's working. You don't want to really just to spend lots of money on going through this process if the broker will go bankrupt. As you can see in my pie, you will see that I have quite a big amount of companies in technologies. I have a company in the oil, that's a Chevron company that we have discussed with you before. I have also healthcare company, it's called United Health Group. I think that's one of really the best one for me in the future. Also I do have a pharmaceutical company that is Blurred. Also, as we have discussed, I have an ETF company, Invesco. I have had the electrical company, but I have just sold it. Also the real estate company, it's called Realty Income. I think it's also going to have a very good future, especially after the COVID-19 recovery. I think it's going to do really quite a good job. Also, as you have seen, I have quite a big percent in the payment services, and also the retail market is quite a big one. And there is also one thing that I would like to discuss with you in the next video. I'm going to make it for you, is this SPAC. So it basically stands for Special Purpose Acquisition Companies. Yeah, and there are quite a lot of companies that are doing really good job nowadays, and the main purpose of these acquisition companies is just to merge with another company and make money. So what they're actually doing, they're just taking the money, they just have a lot of, like, I will say, like, up to, can be even up to $1 billion, and they're just trying to have some discussions with other companies to buy them and make them public. So they, for instance, being private, now they're public. Like, for instance, with the example of Nikola Corporation. If you have invested in the acquisition company that have merged with Nikola Corporation, usually they're at the price of 10. They are going on the stock market with the price of 10. If you have done so, you will just have, I don't know, 900% of your profit can be even done, like up to, if you're just kind of trying to defend yourself, it's 5x, 6x, 7x, just 100% you can make it. But it all depends on the matter of which specs you will choose, and we'll discuss it more in the next video. So for today, guys, I would like to say that you really need to think of these 5 steps. So first step is apply your strategy. So choose the group that you really fit to. Then you need to choose your watch list. So that's basically the companies. You can build even your chart in Excel. That's quite simple. Also you need to choose a reliable broker. Some of the examples I have provided to you before. Also, you need to, then after this, you need to check the company's balance sheet and income statements. And the 5th point, that is quite simple, but you cannot disregard it, is your own research. Not just the company's balance sheet, income statements, your own research, meaning you need to look on the way how this company is doing, not just because of the income statements, because sometimes the income cannot really indicate the way how it looks. So once again, what I mean by this, I mean you need to look into some news, like reading the news on Bloomberg, reading the news on a Wall Street Journal can be also very efficient in this matter. Just download the Bloomberg app, turn on notifications, and you will see each 1 hour you will see some some news that will come up. For example, I will just give you a brief example in our conclusion. Last week it was a bigger one in regards to the fact that the Saudi Arabian tanker has been under the attack. And what has happened with the oil price? Imagine it has jumped up to 70 bucks. We'll go now to TradingView. That's basically a very good instrument to look in the stock market and the way how in particular the stock price is doing. And as you can see on the TradingView, the price for the oil has gone really dramatically the week before. So what we actually need to end up here, as we have discussed all of these 5 simple steps, I would like really to thank you so much, guys, for looking into this video. And I would like really to see you in the future with me. I'm gonna also post lots of videos in regards to the stock market, the way how we can invest. Also, I will show you the way how our investment platform working, where you can also purchase some really good ebooks. Some of the information definitely will be absolutely for free, and I will put some of them below in the description. So guys, enjoyed this. If you found it really helpful, just leave a comment. If you want me to do more videos in the future, let me know what you want them to be. But apart from that, guys, we are done for today. If you love this video, leave a like, feel free to subscribe. It really helps me out on this channel as we just start to grow, or in the very young channel. Thanks ever so much for watching, guys. I really do appreciate it, and I will see you in the next video.